What's up, everybody? Welcome back to the Crypto Sherpa live channel where I cover the daily crypto news for you so you can stay informed. And again, when I would say cover, I mean I read you that article. So if you're looking for like me explaining it, I sometimes chime in some my thoughts on it, but I read you that news so you don't have to do it. But yeah, tons of articles today. The largest bank in Italy entered the crypto market, not by accepting it as payments or anything, but they used it for actually investing. They threw in $1 million. So that will be our first article we go over. Plus, there's some like SEC news about like they're ready to change the laws once Trump gets in right away. I think there's some Sonium news trouble out there. XRP hit $3. What's going on there? Lots of whale transaction. And then, should we just start off with the funny news articles for what's going on out there in the space? I think so, because I've been hearing a lot more about AI agents out there, and like people want to use them for like do their trading. They can have access to a wallet, which is pretty cool and everything. But now it looks like this. I guess this is why it popped up usually on Decrypt. AI agent Eliza OS is getting a robot body, but it is not for sex. So when I saw, I was like, what? Like, it was kind of slow with crypto news, but not really. It was like, but this popped up. I was like, what? Yeah, so they're making an AI robot for just be a productivity partner. But again, like 2 days ago, they had this article on saying the AI agent, here it is, are getting artificial vaginas, and they're using Eliza OS. So yeah, that was just funny. I had to just share that. And then also, let's see what else is going on in the news, like the weird stuff out there. TV channel removes interview about woman who sent $850,000 to scammer Brad Pitt AI. So be careful out there, guys. Don't fall for these fake celebrities out there. But this was kind of like what she was. No, that's not who she was, but she thought she was talking to Brad Pitt. She invested a lot of money, so don't do it. And was there any other weird articles out there? We have the Hawk Tour girl is actually missing right now. Yeah, the Hawk Tour girl hasn't posted since her new podcast, since her crypto project imploded. And you won't believe what the final episode title was. It was How Not to Get Canceled. So that is funny. But yeah, so let's go through the actual crypto news now. What's going on? What's happening? I think I wasted enough of your time. So yeah, let's go over this. So our first article again is Italy's largest bank enters crypto market with $1 million Bitcoin investment. Intesa Sanpaolo has become Italy's first bank to make a Bitcoin investment after buying more than $1 million worth of Bitcoin during a period of growing institutional interest. So Italy's largest bank, Intesa Sanpaolo, became the first Italian bank to make a Bitcoin investment, purchasing 11 Bitcoin for about 1 million euros. The investment comes just over a month after Bitcoin finally touches $100,000, surpassing the $100,000 mark in December. Now, the news emerged from a leaked internal email by Nicola Bardocchia, head of digital asset trading at Intesa Sanpaolo. In the email, Bardocchia wrote, as of today, January 13, 2025, Intesa Sanpaolo owns 11 Bitcoin. Thanks to everyone for the teamwork. This result would not have been possible without each of you. And here is a blocked out image of the email of like the Grazie a tutti, so talking about it in Italian. And yeah, so Intesa Sanpaolo has not responded to Cointelegraph's request for comment on this. The bank confirmed the Bitcoin acquisition with the media outlet was Wired. Now, the Italian bank's investment comes during a period of increasing institutional interest in Bitcoin, which saw Bitcoin exchange reserves sink to near 7-year lows on January 13th, as the crypto hedge funds bought the dip, reinforcing expectations of a supply shock, which occurs when strong buyer demand meets a decreasing amount of Bitcoin, leading to price appreciation. Now, institutions are buying the dip. Bitcoin's price has been trading below 100,000, but we passed that today. Psychological marks since January 7th. And here's that chart so far. So yeah, when this article was written, Bitcoin was at 96. We are here now, so very nice. Now, institutional investors have also viewed this as an opportunity to buy the dip. MicroStrategy bought over $243 million worth of Bitcoin at an average price of $95,972. Boosting its corporate holdings beyond 450,000 Bitcoin. Now, that is a lot of Bitcoin that company has. Now, while some analysis foresee an end to the current Bitcoin correction, BTC remains vulnerable to macro drivers. In the absence of positive regulatory developments, Bybit researchers told Cointelegraph that Bitcoin and crypto have reverted to being reactive to macroeconomic news at the end of 2024 and beginning of 2025. Particularly the slower pace of rate cuts anticipated by the Fed in the new year. Now, despite macroeconomic concerns, some analysts expect a Bitcoin cycle above $150,000 in late 2025, driven by a predicted $20 trillion increase in the global money supply, which may attract $2 trillion of investment into Bitcoin. 150 by late 2025, we're about to hit that bull run. I'm thinking like maybe in a couple months we'll be seeing that within like the February, March, April. Yeah, those are going to be some nice months to see the price go up. So yeah, we'll see how fast and high Bitcoin can go. But yeah, so that was our first article out there on Italy's largest bank buying $1 million worth of Bitcoin. So, woo! And usually Italy has not been too favorable of the crypto, but institutions are getting in, and more are. Now, next up in our article, list of articles, we have the SEC ready to rewrite crypto rules as President Trump takes office. So, yeah, what rules are going to be changing or how fast? Let's find out. The Republicans at the SEC are locked and loaded, ready to change the way crypto is regulated as Donald Trump steps into power. Reportedly, the overhaul could start as early as next week. Trump's pick for the SEC chair, Paul Atkins, is a crypto fanboy who is expected to pull the agency out of Gary Gensler's enforcement-heavy era. Now, but Atkins' Senate confirmations hasn't happened yet, so the torch is temporarily with Commissioners Hester Pierce and Mark Uyeda. These two are already drafting plans to untangle the messy web of crypto regulations left behind. Now, the first item on their agenda is defining when a digital token is a security. This issue has haunted the crypto industry for years with no clear answers, and Pierce and Uyeda aim to start a public feedback process that will lead to the two new rules. But that's not all. They're also diving into lawsuits that the SEC under Gary filed against crypto firms like Coinbase and Kraken, and view is in the works to decide in which cases to keep and which ones to scrap. Gary Gensler's SEC left a trail of lawsuits behind him. During Gary's tenure, the SEC filed over 83 crypto-related enforcement actions. That's not a typo, 83. His team has accused tokens of acting like securities and went after companies for allegedly breaking the rules. Many of these cases are still tangled up in court. But now, Pierce and Uyeda are putting the brakes on this frenzy. Two sources say that they plan to pause litigations that doesn't involve outright fraud, and some cases might even get dropped entirely. Now, for companies caught in the crossfire, this is huge because crypto firms have long argued that the SEC rules are unclear and that cryptos are more like commodities than securities. Pierce and Uyeda want to finally bring clarity. But clarity doesn't come easy. Lawyers warn the dropping enforcement cases could create chaos. Dismissing dozens of cases would be unprecedented, said Philip Moustakis, a former SEC attorney. It could look at enforcement as being politicized. Courts might even object. Now, if scrapping cases isn't feasible, the SEC might try to reopening settlement talks. That's the norm in enforcement cases. Companies negotiate to avoid drawn-out lawsuits, but under Gary, many crypto firms complained that the SEC wasn't willing to come to the table. Now, Trump's crypto revolution. Trump is expected to issue executive orders pushing all federal regulators to rethink their crypto policies. During his campaign, Trump called himself a crypto president and courted donations from the blockchain crowd. Now, Bitcoin is already feeling the love. It broke $100,000 in December, fueled by the hype around Trump's crypto-friendly agenda. And it's not just Bitcoin. Ethereum and other major tokens have been riding the wave too. Meanwhile, Pierce and Uyeda are also looking to undo some of Gary's less popular decisions. One target is the accounting guidance that made it insanely expensive for companies to hold crypto, for other businesses have been begging for this rule to go, and it looks like they're get the wish. But don't think this means the SEC is going soft. Fraudsters are still in the crosshairs, and even with all these plans, don't expect instant results. Rulemaking is slow, and resolving legal battles takes time, but the winds of change are blowing, and the crypto industry is watching closely. Trump's administration has promised a fresh start, and for now, it looks like they are delivering. So very, very nice. So I'm ready for these changes. Again, it's a slow process, so I'm still questioning like where we're going to be with this cycle. Like, is Bitcoin going to keep going eventually? Like, or will we go up, have a dip like the usuals? All coins will probably continue, but when we have a reserve, some other states, because there's a lot of articles out there I'm not covering how Texas is put forth their own reserve as well. Oklahoma was like the other day. But like as these come in and other countries as well start increasing it, Bitcoin will go up and then even more institutions get in. So I'm just excited for 2025. This is going to be a great year to just be in. So be ready for it. But that was our article on the SEC ready to change some rules once Trump gets in. Next up, more news with the U.S. government, and they say that funds from 2016 hack should return to Bitfinex. Due to a prior reimbursement plan from Bitfinex, many victims of the 2016 hack do not legally qualify as victims eligible for reimbursement. So hopefully this will help it out. So let's hear a little bit more about this. Attorneys for the U.S. government recently submitted a motion requesting that Bitcoin forfeited as a result of the 2016 Bitfinex hack should be returned to the cryptocurrency exchange. The January 14th legal filing stipulated that the return of approximately 94,643 Bitcoin and unspecified amounts of Bitcoin Cash, Bitcoin Satoshi's Vision, and Bitcoin Gold, generated through hard forks back to the exchange on an in-kind basis. Now, Ilya Lichtenstein and his wife, Heather Morgan, aka Razzle Khan, were both arrested in 2022 and later convicted for the 2016 hack of the Bitfinex exchange, which resulted in the theft of 119,754 Bitcoin. At the time, the stolen Bitcoin amounted for only $72 million, but today, that same amount of Bitcoin is worth $11.8 billion. So, raising debate over Bitfinex compensation plan for victims of the hack at that time. So, yeah, that's pretty intense. But Bitfinex's compensation plan and controversial court ruling. Within days of August 2016's hack, the exchange halted withdrawal activities and implemented a recovery plan. As part of the plan, Bitfinex socialized monetary losses and announced that all accounts would lose 36% of their value. Users received an equivalent amount of BFX tokens to cover their losses, or upon choosing, redeemable for shares of iFinex, the parent company of Bitfinex. Now, each BFX token was redeemable for losses denominated in fiat currency using valuations at the time of the hack, but all of the BFX tokens issued by the exchange were redeemed by customers within 8 months of launching the recovery program, satisfying the government's requirement for victim reimbursement. Now, in October 2024, a legal filing from the U.S. government revealed that Bitfinex would likely be the sole recipient of reimbursement from the case due to its recovery plan to make customers whole. However, the U.S. government also admitted that there were potentially thousands of customers who had their account value reduced as a result of the hack and the compensation plan. The government invited victims of the 2016 hack to submit impact statements by November 13th, 2024, and additionally, a website was launched to notify potential claimants of the hack, including the Bitfinex account holders, as legal notices impacting claims. So, yeah, so should they get back all that money? Well, they should, definitely. So, I mean, reimburse the people they basically stole the money from, because after the hack, it's like you're losing 36%. Yeah, was that the cause of the last dip? Or I could have swore it was Mt. Gox. That was probably just one of the falling pieces like we saw in the last cycle. FTX, oh gosh, how about 3 Years Capital? Oh gosh, there's like 2 more, Celsius and one other I can't remember, but yeah, there's always like a domino effect of like when we see the bear market happen. So again, if we're on traditional cycles, if you start seeing like stuff like that happen, people are getting hacked, companies are closing, and it's like okay, you may want to think your plan out. But that was our government news wanting to return the Bitfinex Bitcoin coins. Now, next up, Thailand to ban Polymarket in online gambling crackdown. So, you know, Polymarket, everyone placing bids during the election. Who's going to win, Kamala or Trump? Or is Gary actually going to resign? So it looks like Thailand's planning on banning that platform. So let's go through this article. So Thai authorities noted that the decentralized prediction marketplace operations fall under illegal online gambling, which is banned. So they got to stop it. Thailand's Cybercrime Investigation Bureau said that Tuesday it will propose a ban on Polymarket, stating that the platform facilitates illegal online gambling through crypto. Thai authorities noted that the decentralized prediction marketplace operations fall under illegal online gambling, which is prohibited in the country. Suspending Polymarket is vital to protect against online gambling and crypto misuse, as it poses significant economic and social risks, stated the Technology Crime Suppression Division, commanding Trerong Philipian, during a press briefing on Tuesday. Now, the timeline for the proposed shutdown remains unclear, but officials are prioritizing swift action to safeguard citizens and prevent the exploitation. Thailand is not alone in its crackdown. On Polymarket on January 12th, Singapore blocked access to the platform under the Gambling Control Act 2022, labeling it as an illegal gambling site. Taiwan took action as early as 2023, banning the platform and prosecuting individuals for placing bets, including one user who wagered $530 on election outcomes, as per the local news reports. Now, in a November 2024, Polymarket voluntarily withdrew from France following investigations into compliance with local gambling laws. The United States has similarly scrutinized Polymarket, with the Commodity Futures Trading Commission fining the platform $1.4 million in 2022 and restricting its access to US-based users. So you need to have a VPN to gain access to be able to use it. But there has been a rise of the Polymarket. Polymarket, which allows users to place bets on a wide range of global events, has seen an impressive rise in popularity since its inception. The platform gained major attention during the 2024 U.S. presidential election, becoming a key alternative to traditional polling methods. As betting on the election heated up, Polymarket became increasingly cited by major media outlets as a barometer for public sentiment. Now, Polymarket saw an astronomical $3.6 billion in trading volume during the election cycle, with much of the focus on the U.S. presidential race. However, while some users made significant profits by betting correctly during their elections, the vast majority lost money. Approximately 86% of accounts had a negative profit and loss margin, with many users placing smaller bets in hopes of a quick win. Only a small percentage, around 1%, have realized the profits exceeding $1,000. Now, Polymarket continues to thrive even after facing multiple bans across the world, as it recorded over $991.93 million in trading volume in the last 30 days, as per DF Radar. So Polygon's still booming out there, but it's about to be banned in Thailand. So, guys in Thailand, may want to stop using that or get a VPN to hide yourself, like Americans do to use it. So, that's our Thailand banning Polymarket news. And then lastly in the news, because I really don't need to cover the XRP news article about just passing $3, but the network has seen a surge in will transactions right now. So if you're wondering why XRP pumped up 30% within the past week, it's probably because of this, because we're now touching 302. Is that our correct pricing? Let me pull up the actual chart. Let's see, what's our current price right now? XRP is at 303, so even got pushed back up to number 3, surpassing Tether, USDT stablecoin. So tons of wills are doing some trades right now, and so that's no need to go over that article, but just if you're curious about why XRP is pumping, at least a handful of wills out there are transacting at the $1 million level mark with XRP tokens, so that definitely caused the price to spike. But let's go over our last article on Sony's Layer 2 network. Sonium triggers outcry over the censorship features. So Sony was made a Layer 2 on Ethereum's blockchain. And can I close out that thing? No, I can't. So that pop-up's down there for good. So they have an ERC20 token, or they should have an ERC20 token, but they are a Layer 2 on it, but there has been some backlash with them. So community backlash erupts after Sonium's launch, with critics labeling its restrictions as anti-decentralization. So it looks like they got some censorship going on. Let's see exactly what. Japanese multinational conglomerate Sony is stepping into the blockchain spotlight with the launch of Sonium, its Layer 2 solution built on Ethereum network, designed to unlock new possibilities, enhancing fan engagement and leveraging the transformative potential of Web3 technology. Sonium promises a future where creators, fans, and developers collaborate in a decentralized digital space, according to a January 14th mainnet launch announcement. But not everyone is buying it. Crypto diehards are up in arms over the platform's controversial approach to intellectual property protection. Now, if you also don't know what is Sonium, well, Sonium is Sony's bold leap into Web3 space. Built on the OP stack from the Optimism Foundation, the Layer 2 blockchain aims to bridge the gap between Web2 and Web3 users. The platform integrates Sony's NFT-based fan marketing platform and Sonium Spark initiatives designed to support creators and offers fans unique experience. Now, Sonium also leverages Sony's entertainment division, Sony Pictures, Sony Music, and Sony Music Publishing, bringing blockchain-based digital collectibles to fans as a gateway to exclusive content. The goal, to enhance fan engagement and foster deeper connections between creators. And what was I about to say about that? Oh, yeah, the NFTs and fan base. I think I saw another article out there about NFTs aren't doing so hot still right now. I remember hearing the Alex Becker saying don't sleep on it. They should have a rise. I'm just not sure about that. It was the Bored Apes or the Crypto Punks NFT is like just had its lowest volume yet. But so NFTs are more collectibles, not so much of an investment in my eyes. But let's move on with the article. We have a Twitter post from Cause, Sonium rugged users greater than 100,000 in ETH on launch day. I've never seen anything like it, but wants to be permission chain? Fine. Instead of whitelisting developers, they chose to instead freeze contracts, effectively rugged users. So, ooh, come on, Sonium. But Sonium isn't just about fun and games. It's packing tools to protect IP and promises fair profit sharing, aiming to shake up digital creativity. Still, some in crypto crowds are fuming, accusing the developers of rug pulling investors with censorship features. Now, here's that community backlash. The launch hasn't been without hiccups. While some celebrated Sonium's launch, others expressed concerns over its approach to restricting certain blockchain activities. Co-founder of the DeFi creator studio Pink Brains, Ignas, commented on Sonium's launch, noted in an X post, "That's all current corporate L2s and what they fall short of, and we will probably never align with Ethereum as their incentive structures differ." Now here's another tweet from Ignas DeFi. Ethereum needs a community-driven layer 2, and layer 2 that mirrors Ethereum's layer 1's values and fairness, decentralization, and value accrual to ETH. Now, currently, all corporate L2s fall short and will probably never align with Ethereum as their incentive structures are differ. Now, the backlash comes from Sonium's policy of blacklisting addresses linked to IP violations or harmful actions. While meant to protect creators, it sparked debates over decentralization and fairness in Web3, which is widely seen as a space built on openness, user autonomy, and resistance to centralized control. Now, how does Sonium's censorship feature work? Sonium has a system in place to address unauthorized IP use and potentially harmful activities. When a violation is suspected, the platform adds the offending contract address to a suspected of IP infringement list according to the network's documentation, and the listing triggers a warning period allowing developers to resolve issues without facing restrictions. If the issues aren't resolved, the contract gets slapped and restricted list. That means limited activities like cutting off public RPC access and even making it invisible to tools like Block Explorer. However, Sonium has emphasized that these actions are reversible once improvements are made. Though the contract status can be reassessed, the developers say adding that labels may be updated or removed following a thorough review. Now, Sonium's response to all this is the team has defended its policies, emphasizing their commitment to decentralization while also safeguarding creators. We kind of saw if you don't have a little bit of protection again for everyone with Pumped Off Fun with their live streaming feature, people are pretending to commit suicide. There was beat ups and so I did agree there need to be some. So this kind of does make sense. Now, following the community's backlash, the developer tool to X reaffirms users that the network remains committed to protecting creators' IPs and rights and their on-chain while maintaining the spirit of decentralization. Our documentations outlines how we safeguard IP rights and combat malicious activities, all while keeping Web3's core values of openness and innovation intact. Crypto.news reached out to Sonium's team but did not hear back before publication. While Sonium's director, Soto Watanabe, didn't directly address the backlash, he did share an X post after the community spoke out that the developers want to use the OP stack to protect creators' rights from infringement. He said, "I knew it. The question is how to protect creators' rights from IP infringement while maintaining censorship resistance. The answer is OP stack." Now, despite the censorship feature, there are still ways to get around them, and I'm sure people showed that off right there. Now, as Gotham Santhouse, founder of the Ethereum-based derivatives network, Polynomial, explained in an X post, Sony might try censoring at the RPC level. Still, they can't stop users from pushing transactions through Ethereum's mainnet, and this is because OP Stack's decision forces every I2 to inherit Ethereum security guarantees. While Sonium seems to be having a bit of a rough start, Sony's push to blend blockchain with everyday life could set a new standard in Web3. Whether the network can deliver on its promise of fairer, more connected digital world, or remain just another niche network with limited impact is yet to be seen. So that's basically everything going on with Sonium right now. But no, I kind of agree. It's good for it. So Sony, keep doing what you're doing. But there has to be like some type of way. But again, you can always back around it, push it through the Ethereum mainnet. As they said, that's just in its code to do so. But no, so that's what Sony's been up to and how people have been feeling about it. But that is it for all the news I have. That was quite a bit for you. Thank you for those who tuned in. Let's see. Bitcoin. We just dipped under 100,000 again. We're at 99989. So hopefully we continue going up tomorrow. Would love to see that. Our fear and greed index is at 51 neutral. So, But yeah, so that is it. Hope everyone has a fantastic night. I will hopefully see you tomorrow, if not in 2 days. I'm getting better at being more consistent again. So, so thank you all for tuning in, and I will see you again soon. Peace.